What's brewing in India's alcohol market? What's worth sipping and what should you steer clear of? Hello and welcome to a fresh edition of Finding Alpha. I'm Nigel D'Souza and joining me today on the show is Karan Taurani, Executive Vice President of Elara Capital. Well, Karan, thanks a lot for joining in. And just to all our viewers, well, Karan is all set to uncock some answers, pour out the facts as we address queries on alcohol, media, as well as on retail. Karan, welcome to the show. Well, I'm sure you've had your fill over the weekend, but let's focus on a couple of stocks. Let's focus on the sector on the whole. So let's start off with a very basic query then. What's the size of India's alcohol market as of now? And where do you see this number headed?
Hi, Nigel. It's a pleasure to be here on this show. If you look at the alco-bev market in India, it's about $47 to $48 billion. It's growing at about 8 to 10%. The overall volume numbers is about 1,000 million cases. Okay. 450 million is the spirits market, which is whiskey, brandy, rum put together. 420 is the beer market, and the balance is country liquor. So the market is growing very well at about 8 to 10%. 6-7% is volume-led growth, and the balance is value-led growth.
So from around 3 trillion rupees approximately, you're saying that in the next few years it heads to around 5 trillion, right? My query to you is, a lot of the youth of today, they are very health conscious. That's at least the buzz that we hear. And maybe when we were growing up, it was a little bit different. But have you taken into account this risk factor in their estimate of around 3.5 trillion rupees to around 5 trillion rupees?
So what's happened, Nigel, in a market like India is that more than 40% of the population is Gen Z. Now, Gen Z are basically the ones who actually don't want to drink quantity, they want to drink quality.
Okay.
Right? So we have seen a rapid movement in terms of premiumization trends, wherein the luxury segment, the higher end segment is growing at a faster pace. A lower end segment continues to struggle here. So I think there is a bit of a pressure in terms of volumes.
Okay.
However, the negative impact of this lower volumes will be more than offset by positive impact of the realization per case, because the consumer is moving towards the high end of the segment, the luxury upper prestige segment which is there. So I think net-net, the industry should grow at about 8 to 10%. And as I said, volume is going to be negative for the lower end of the band, but the upper end of the band will take care of this negative impact.
Okay, India wants to consume more premium alcohol.
Absolutely.
Let's focus on the per capita, because that gives you a fair indication, right? Yes. India was lagging, till a few years ago, but gradually, India's per capita consumption, if I compare it with the globe, that's, I think, catching up a little bit. So could you fill us in with those numbers?
So the per capita consumption has increased over the last 3 to 5 years, specifically in the post-COVID era. What's happened is that we're looking at about 3.5 liters in terms of per capita consumption. Now, if you break up that number, we are a very high ratio or a high split here towards spirits and whiskey. As far as beer is concerned, we are less than 10% in terms of volume share. If you look at other markets on a comparative basis, markets like US, China, European nations put together, their share towards the beer market is, in terms of volume or in terms of consumption, is as high as 40%, 50%, even 70% in certain states. But in our country, the beer share is less than 10%. That's where we are. So we are a spirits and a brown spirits, white spirits market in a large manner.
Yeah, and that gap with the global per capita, which used to be around 3 liters, that's come down to around 2 liters, and now it's hovering in that vicinity of around 1.5 liter. And, going ahead, that's likely to narrow. But since you briefly spoke about, the split of the India market and what Indians are consuming, give us a few more details. What is it category-wise? Whiskey, brandy, beer, if you could break that down for us. And in IMFL, if you could further break it down for us, what is it?
So if you look at the market, as I said, at the one end, you've got the beer, which is about 400 million cases. At the other end, you've got spirits. Now, spirits is like a large market. It's got multiple segments within that. Around 65 to 70% of your volumes is brown spirits, which is largely whiskey. The second largest segment is your brandy segment. Yes. Third is the rum, which is around 10-12%. And the balance is basically wine, vodka, everything put together. So I think this is how the spirits market is. Now, if you look at the realization per case within these categories, it's a huge gap. If you look at the likes of vodka, the realization per case would be in the range of 3 to 3,500 rupees. If you look at wine, it's around 4 to 4,500 rupees realization per case. Whiskey is like a wide range between 500 to even 10,000 rupees realization per case. If you look at the likes of brandy and rum, they are more in the lower end. There's not much of premiumization happening in these two segments specifically. So realization per case is low in the range of 15 to 2,000 rupees in these two segments which are there. But as we speak going ahead, India is largely a spirits market, and within spirits, India is a very large market in terms of brown spirits, which is whiskey.
Whiskey, all right. And I think that chart should come up for you as well. But, Karan, if I heard that number correctly, in terms of volumes, beers and whiskey is more or less at par in number of cases, but the realization differs. Is that correct?
Yes, absolutely. So if you look at the market, as I said, 440 million cases is what the whiskey market or the spirits market is. Then you've got the beer market is 400 million cases. The reason why the spirits market is fairly larger as compared to beer is because realization per case. You do get a beer at maximum in terms of pricing in the range of 800,000 rupees per bottle, right? But in the case of whiskey, you can get a whiskey for even 1,000 rupees to even 1 lakh rupees, 50,000 rupees. So because of the big gap in realization per case, in terms of value, the spirits market is far bigger as compared to the beer market.
And since the largest segment, as you said, is whiskey, let's break that down for us. Premium whiskey, that's something that's been selling more. So explain that to us, prestige and above, and what was normally, below that level. And if you could tell us how luxury as well has moved as a segment.
So whiskey typically is like a very large market in terms of multiple categories. So because the market is so large in terms of volume and in terms of value, you've got multiple categories, multiple brands here. To break it down, out of the 400 million cases, one can say that 270 million cases is brown spirits, which is whiskey, and the balance is other white spirits put together. Okay. Now, within the whiskey segment, which is like a key focus area for any company, there's a ratio. So the ratio is basically 100, 110. Then it moves to 60, then it moves to around about 20, and then moves to 10. Now, this I'm talking basically in the line of low prestige, mid prestige, upper prestige, and luxury segment. So as you keep moving upwards in terms of curve, okay, the pricing is higher, realization per case is higher, the margins are better, right? The growth rates are better in every segment. So, for example, in the case of low prestige segment, the growth rates are now about 2 to 3%. In the case of luxury segment, growth rate is 25-30% in terms of volumes.
Right.
Also, very important point to note, India as a premiumization market, if you see, our volume share in luxury segment was only about 3 to 4%, about 4-5 years back. Today, it's about 8 to 10%. So that's the rapid adoption of luxury that we're seeing today. This is also thanks to single malt culture that is picking up. We have seen a lot of new single malts coming in the market, like Rampur, Indri, Paul John introducing some single malts and so on and so forth. So this is actually driving the premiumization luxury culture in a market like India as far as whiskey is concerned.
Okay, let's focus on whiskey then. In the last few years, who's gained market share, who's lost market share? If you can briefly tell us about that, and then we'll get to the big deal that was announced where, you have a brandy player that now wants to sip on some whiskey. So fill us in with first the whiskey market, who's gained, who's lost?
So as I said, whiskey market is largely fragmented. Every company has got at least 4 to 5 brands of whiskey in multiple segments, right? So if you look at the winners here, I think the winners clearly are, some brands of Radico, which have gained the luxury segment. You've got the likes of Blenders Sprite, which has also gained market share. Something like a McDowell's No. 1, which is a market leader in the low prestige segment, they've kind of maintained market share at those levels, which is like a commendable task in itself because that segment is seeing a decline.
Yeah.
Iconic White is also doing well, which is a new brand launched by ABD. They've gained significant headroom and market share over the last 3 to 4 years. If you look at the losers here, I think 8PM has lost market share in the whiskey segment. If you look at Officer's Choice, they have lost market share in the whiskey segment. So these are some brands which have been winners and losers.
And from the top list that's up for our viewers on the screen, just to clear it out, McDowell's is United Spirits. The next two brands, which is Royal Stag as well as Imperial Blue, they come in from Pernod. And Imperial Blue now will move to Tilak Nagar. And Officer's Choice, that's the one that belongs to Allied Blender. Yes. So just, those are the brands, you'll be familiar with that. But in terms of stocks, just thought I'll put out that relation. Since we're talking about that big deal that took place, nearly $500 million USD of a deal was done between Tilak Nagar. They have picked up Imperial Blue. Could you tell us, how does this change things? This brandy player going to have a stiffer peg, how do you see it? First for Tilak Nagar, how do you see it panning out?
So I think this deal is a very big positive for Tilak Nagar. Tilak Nagar, as you know, has been a South-based player. More than 90% of revenues coming from South, more than 90% of revenues coming from brandy segment. They've tried a lot to innovate and move to whiskey segment, but somewhere they haven't got that kind of scale, what they've got in brandy. Now, what this does to Tilak Nagar is 2-3 things. One, it will give them a pan-India access because, Imperial Blue is a large brand, about 25 million cases all over India. So you can get a good distribution cloud and a pan-India distribution mechanism, which is very important for the alcohol business in a market like India, which is, different state subject, different tax issues which are there. The second thing is basically they can also cross-sell, upsell. So many of the new markets which will open up because of this, so they can cross-sell, upsell their existing brands, existing brandy brands.
That is brandy.
Yes. Third very big move is the entry play in the whiskey segment. So as I told you, in terms of value, volume, whiskey is a very large market. So it gives them the much needed access to entry into the whiskey segment. And within that, I think now it's about the execution, right? In terms of how they innovate, how they launch new brands, is going to be a key multiple. But the deal is extremely good from Tilak Nagar's perspective because they can actually become a sizable pan-India player, something similar to what a Radico was about 7 to 8 years back.
All right. So, that'll be interesting to see because some believe that maybe they're looking to have a too stiff a peg, but we'll have to see how that goes. Since you're saying sizable player, you want to put a number to it? As of last count, they were doing some 250 crores of EBITDA. Given that now they're going to get Imperial Blue, say in the next 2 years, what is the rough EBITDA number you should work with, say for Tilak Nagar Industries?
So for Tilak Nagar, if you look at standalone business, I think they were doing EBITDA of 250 crores, which has grown a CAGR of 30% odd over the last 2-3 years with very good margin improvement. I think going ahead, one should expect margin improvement, not in a big manner, but maybe around 8-10% of EBITDA CAGR is what they can do going ahead for the brandy business. So let's assume this EBITDA probably goes to 300-320 crores over the next 2 years. Then you have the Imperial Blue, which is the business that they've got. That, as per our assessment, is making EBITDA in the range of 300-350 crores. That potentially will grow in the range of 7-8%, not more than that, because the segment is struggling for volume growth.
Right.
So let's assume that EBITDA moves to 400 odd crores. So if you do the math, 1 + 1 of both these EBITDAs, you will get about 750 crores of EBITDA in the next 2 years. Now, the thing is that from here on, there are enough synergies that they can draw. They can draw innovation, they can draw luxury, high realization per case, which can lead to better EBITDA on an absolute basis going ahead. If that becomes the case, yes, there is a potential for Tilak Nagar to reach 800 crores of EBITDA in the next 2 years, depending on how they execute on the new brands and depending how they turn around the Imperial Blue portfolio, because that's one portfolio which has lost market share in the last 2 years.
Indeed. Yeah, that's the important point. Imperial Blue has actually lost market share. Now, could this be an issue, though, for United Spirits? I ask you this because, see, Pernod, now they'll sell out Imperial Blue. So they'll focus more on Royal Stag, which has been actually gaining market share. And Tilak Nagar, they have taken over this brand that actually has been degrowing. So additional focus on Imperial Blue. Could it be a risk to the market leader, which, as you said earlier, was McDowell's, which comes out from United Spirits? So is it a risk for them?
So I think this is a risk for the entire ecosystem. One new player actually becoming bigger in the system here, one new local player rather. So if you look at the market, you had 2 large MNC giants, which is Diageo and Pernod operating, and then you had the likes of Radico, ABD, which are operating in a local environment manner. Now, this is one more entry, one more new player which is going to come in. So there will be competition because they will again innovate. They will innovate across segments, not only in the low prestige segment. They will also try to move in the luxury segment as well. So I think this is a risk for the entire industry as a whole, wherein the MNC companies are anyway struggling to gain market share because they are focusing on the luxury segment, which is a very small part of the overall pie.
Yes.
Whereas in the case of local companies, yes, Radico and UNSP, Radico and ABD rather, will see a bit of a pinch basis this.
Indeed, but Radico is one stock that actually you have been quite positive on. And that graph actually should come back on for our viewers. It could pose a bit of a challenge to them as well, but I think they have been focusing on premiumization. So how do you see this pan out? New player coming into the whiskey market, Pernod as well getting aggressive. What's the take on Radico? Does it have enough triggers to even do well from here?
So Radico does have triggers to do well from here. There are 2-3 reasons for that. I think Radico net, you have to see the P&A volumes have been extremely strong. They're growing at about 15-20% P&A volumes consistently in the last 3 to 5 years, and that traction continues. They are a market leader in vodka segment. Okay, so vodka segment, they've got more than 60% market share. They are the 5th largest vodka in terms of selling, in terms of Magic Moments as a brand. So that's their moat. Third mode for them is basically the expansion into single malt. They are expanding aggressively over there, launching single malts. Luxury offtake is very high, and that's leading to the entire premiumization play for them. So I think these are things which are playing in favor of Radico. Plus, Radico is a company which is like a portfolio-led company. Yeah. They don't have exposure only in one single category like a whiskey or a gin or a vodka. They are broad-based across categories, right? Okay. So even if one category doesn't do well, they always have the option to go to the other category and do launches over there and piggyback over there.
So just to revise what you're saying, Tilak Nagar, it has potential. We'll have to see execution. United Spirits, it could be under pressure because of a new player coming in there. Yes. Radico, you believe it has enough of diversification, enough of focus on premiumization.
And luxury, yes.
And luxury, which can continue to do well. What about Allied Blenders? What's the view out there?
So I think Allied Blenders is done well in the Iconic White, the new brand which they have launched. Yeah. But Allied Blender is not able to innovate in the luxury segment or do well in the luxury segment the way Radico has done with their brands. So ABD needs to focus in terms of premiumization luxury segment in a very big manner if they were to scale up their market share and go to premiumization.
Okay, so that's going to be the focus for Allied. What about the UK FTA? That's supposed to be a benefit, right? Who benefits and by how much? If you could give us a few numbers.
So UK FTA, that way in terms of overall impact, you could see Scotch prices coming off by anywhere in the range of 15-20% over the next 1 year. Whenever
That would help volumes.
That would have volumes, but that would help volumes in a very small manner, because if we look at the Scotch market as such, it's only about 8 to 10 million cases, right? And so UNSP as well does not do more than Scotch volumes of more than 4 to 5 million cases. So it's a very small positive impact, so to say, and it's not a big positive for UNSP rather, because the margins are capped in this Scotch business. So in terms of overall EBITDA, they may not see a big delta, but volumes will obviously go up for United Spirits. The bigger delta from the UK FTA will be the bulk Scotch prices. So for any whiskey company, around 8 to 10% of their COGS is coming from bulk Scotch, whose prices will come up by 40%.
Yeah.
So this is an EBITDA margin positive impact for all the companies which are procuring bulk Scotch, and that's going to drive margins anywhere in the range of 100 to 150 crores of a positive impact after UK FTA.
All right, so UK FTA will be positive for United Spirits, but you're saying in the entire scheme of things, it may not be that big a delta, at least as of now.
Because of the margins being capped and because the volumes being smaller.
All right, let's turn our attention then to beers. There has been focus on premiumization there as well. But gross margins haven't really improved because the cost of goods actually has moved up. The input costs have moved up. Now that's cooling off. So what's your view on United Breweries? First, tell us the size of the market, how is it headed, and view on United Breweries.
So beer as a market is very similar to spirits. You could see volume growth of 6 to 7%, which is slightly higher as compared to spirits, which is 4 to 5%.
Yeah.
And value-led growth of around 9 to 10%, which is similar to the whiskey market, which is there. In terms of beer, what has happened, the margins have actually come off significantly for United Breweries because of 2-3 major reasons. One is they are focusing on premiumization of beer. So they are trying to actually launch new products in the premium beer segment, which requires new bottles. Now, because of this, the glass prices have seen a significant increase for them. Yeah. And glass, as we all know, is 40% of COGS for any beer company. So that's one reason which is there. Second is reusability of bottles has also come down. There's been some issues in terms of supply chain, all those things which are there, which is also impacting the glass, again, the elevated glass prices which are there. Third, I think they're investing very aggressively in terms of operating efficiencies, manufacturing excellence, all those things to drive actually better efficiency from medium to long-term perspective.
Yeah.
A fourth reason has been the barley prices. Now, the barley prices post the Russia-Ukraine war has seen major elevation in around 2022, but that's not seen a cool-off to the pre-Ukraine, Russia-Ukraine war levels. So I think that's also impacted margins to a certain extent. So putting all these things put together, I think margins have, that's why, come off by 600 bips in the last 3 to 4 years. Yeah. But nonetheless, we do see glass prices cooling off, primarily because now the premium beer glass prices will slightly come off.
Yes.
And secondly, the reusability of glass will also increase. So putting both these things into perspective, we do see margin improvement of 200 bips over the next 2 years for a UBL.
But yet you'll have a sell rating on that.
We have a reduced rating on UBL with a target price of 2,000.
All right. And on UBL, the premium segment, the graphic plate was showing us that actually that has gone up, that's growing at a faster clip. How much is premium as a percentage to their total mix?
So if you look at UBL, their premium beer is about 10 to 12% contribution in terms of volume. Yeah. But the growth rates are significantly higher. So since Heineken took over the company, the entire focus was in premiumization play. If you look at their market share in premium beer, it was sub 10%. It's now come to about 15 to 18%. Because they are consistently growing about 25-30% in terms of premium beer volumes. And that's primarily because of the Kingfisher Ultra, Ultra Max, Heineken push they're doing right now.
All right. Karan, we have some more questions for you. Maybe squeeze in a couple of them on alcohol. We'll also talk retail as well as media. We'll take a short break. Up next, we'll answer all the queries that you've sent us. Don't go anywhere.